Hey guys, James here with the Pham Real Estate Group. So today we're going to be speaking to Entee with Polaris Home Loans regarding about their Heloc loan programs, and we're going to talk about what it is, what you can use the Heloc for, some of the benefits of it, pros and cons, and what you need to know about the Heloc loan. So Entee, what is a Heloc loan?
Hi James and audience. So like the Heloc loan is like the second loan on the top of the first mortgage, and so the Heloc loan is like really flexible. It's like the full name of the Heloc is Home Equity Line of Credit. So you can use it as like a credit card. You can use it like you pay off all of the debt and then you can start over with the new one. So you can get on top of the first mortgage, the Heloc loan, the strength of it is like they can help you to obtain like all the way to like 97.5 LTV, like loan to value. Like if your house value a lot, so you can get the Heloc loan on top of the first mortgage is on the way up to like 97.5. Yeah.
Yeah, so a HELOC loan is really good if you have a really good, say, have a lot of equity on your house, and when you have a lot of equity in your house, and you have a very low interest rate currently right now, you don't have to refinance your house and cash out that money, right? And cash out and get a higher payment because of the interest rate. So what you can do with the HELOC is considered as a secondary mortgage. Because of the secondary mortgage, only the secondary part get charged with a certain amount of interest rate, which is the HELOC interest rate. So then you don't have to refinance, cash out, refinance that whole amount. So what are some of the things that people can do with a HELOC? So a HELOC, home equity line of credit. You can do a lot with a home equity line of credit. A lot of our clients, they use it to buy their second home,
Yeah.
right?
So you can because like the money ready in hands.
Right.
So you can use as a down payment for another investment. You can use it anything to start a business.
Start a business, yeah.
It's exactly like the rate and the calculation is gonna be different a little bit, but then it's exactly like the cash out refinance. Yeah.
If you want to do a HELOC, what are the process like? So let's just say I want to apply for a HELOC, all right, for a house, for our current house or for anybody current house right now. Do they have to use the money right away, or can it just be, or how long do they have to, how long can they use the money after the appraiser appraised the property?
So like after we close the loan, so they can use the money right away.
Okay.
Yeah, they can sign up for how big they want to draw the money at first, but then after that everything is like exactly like your money. So you can use and more flexible. Like you can get the Heloc $200,000, but you can use $100,000 first, and then you want like something always ready for you to invest. Like if the change come.
If you don't use it, right, does the money go straight to your bank account, or it just stays in like an escrow account? Like how does that work?
The Heloc value is always stay there. It's like your credit card.
Okay.
The maximum you can get, and so like after that, so if you withdraw it, it goes straight to your bank account.
So when you start withdrawing it, that's when they start charging interest, or do they start charging interest right away?
Yeah, that when they starting charge interest. Yeah, but then they flexible on the term also. You can have a lot of option. Like you want to starting 10 years in the row to just pay the interest only, and then 20 years after you can fully amortize.
So there's a lot of good benefits. So you don't have to pay the principal or the amortizations. With the HELOC loan, you can start by paying just interest only for the HELOC, which is really good. So you can get access to all the capital upfront up to 97% of loan to value.
Yeah.
So let's just say you have about 50% of equity in your house, right? You can use say up to 97% of combined, which is your equity and also your secondary mortgage. So So that's really good. So what are the qualifications in order for you to get a home equity line of credit?
It's gonna be easy a little bit compared to like the cash out refinance. Like even like the appraisal, they're gonna do a try by appraisal, like for almost on scenario.
Who paid for the appraisal?
Us, yeah, the buyer or the borrower.
The borrower.
Yeah.
So normally appraisal is normally like $500 to $600, but it's worth it. It's like opening up your piggy bank reserve for emergency cash if you need to and use that money to invest into a business, or if you need that money to invest in like a stock that just recently went down, and you want to buy a whole bunch of it. So it's really good for that.
Especially like like the last 2 years, like with the crazy refinance rate, and like right now almost everybody they have like really low rates right now.
Right.
Like even with 30 years or like 20 years, 15 years, they have like around like my loan is 1.99%. And then I don't want to cash out and say start over with like really high interest rates starting from 5. And so this is the reason why like Heloc right now we can have a lot of borrower obtain to us and like try to talk to us about a Heloc option.
Yeah, so a HELOC option is better than a cash out refinance. It's more flexible. You don't have to take all the money. You're approved for a certain amount if you want it. Normally, what I would recommend is if you have equity in your house, go ahead and open up a HELOC loan ASAP, just so then you have access to capital. At least 90-70% of your capital, and you can use that capital for just allocating in the right directions. And again, you don't have to pay for the whole principal and all the amortizations of your loan, right? You can just pay the interest only, which is really good considering if you are able to use that capital and triple, or just buy a business or buy a second property or buy a flip or whatever it is that you want to buy. A HELOC loan is huge, especially if you're tight in cash. Like let's just say, for another example, is that if you have equity in your house, right, but you have a roof that is super old and you need about $15,000.
Yes.
So where are you going to come up with $15,000? Well, the best way to do it is do a home equity line of credit, which is called a HELOC, and borrow $15,000. And then you don't have to pay the amortizations, which is the principal, interest, and taxes. You can just pay the interest only with your mortgage. So then instead of your monthly payment being around $75 extra a month, it'll be a lot less. It'll be probably like $10, because you're just paying interest only for a certain amount of years, of course. And then after you fixed your roof, you can always get it reappraised. You can do a lot of fun stuff with your property. So yeah, I know the HELOC loan it's really good.
Especially with this moment, like the crazy of like inflation also. Like inflation right now is almost hit like 8%. And so like if you have money in hands and you don't use anything, and so the best way right now, like a lot of people they do cash out, but then HELOC rate right now is better.
Yeah.
And so like a better option also.
Yeah.
And more flexible.
Yeah.
And then so you can put the down payment to purchase the house or like something second home investment. Yeah.
If you open up a HELOC, right, how do you need to use that money right away, or how long does it stay open?
Oh no, forever until you close it. And then the HELOC can refinance also.
Okay.
Yeah.
So, for example, if we apply for a HELOC loan at a 5%, currently right now in this market, would that 5% be fluctuating up and down until you borrow that money, or would it stay fixed?
It's gonna be, because HELOC is different a little bit because we have another product we call HELoan. So HELoan is like a totally fixed, like second mortgage, fixed mortgage. Yeah, but then HELOC is more flexible. But then the flexible they have adjustable rate.
Okay.
Yeah.
So with the HELOC, it's adjustable. So when during good times, or depending on what time it is, right? The most important thing is just access to capital, right? And then paying that back as quickly as you can. Right now, HELOC loans are around 5%, which is really good.
Yeah.
So it's a really good option versus a cash out finance.
with the best case scenario.
With a huge, those are really good case scenarios. I mean, like what you can do with the HELOC loan is probably use that money to pay off your car. And you could use that money because sometimes cars interest rate is pretty high or credit card
Yeah.
interest rate is pretty high.
A lot of like the borrower come to us because like they have a lot of debt in the credit card with 18%, 20%, and 24% and up. And so like this is the reason like you get the HELOC or like this the best option for you right now.
And then so with regard to like paying the principal, like the principal and the interest and all that, like how, so let's just say if you want to pay the interest only, how long can you stretch the loan for?
So the maximum for interest only is 10 years.
So 10 years maximum. So if you do the HELOC regular, like would that be a 30-year amortizations?
Yep.
Okay, very good. So that will kind of give you an idea of, also the interest rate is around 5% for the HELOC, as I already mentioned. Credit score requirement. So if they want to get a HELOC, so what do they need to do now? Like what's the next step?
Yeah. So actually, they have to apply for the loan like
Right.
regularly, like cash out or like refinance their home. And so like from there, we need their income doc like
Okay.
for W-2, and
W-2.
then if they are self-employed, we need tax return. But then it's income proof.
Okay.
Yeah. And then so from there, an appraisal is better, easier, and then all of the underwriting process is gonna be easier a little bit compared to like cash out refinance.
Got it. So pay stubs, W-2, self-employed 2 years, appraisal, decent credit score around 660. So there you have it. That's the HELOC. There's a lot of benefit for a HELOC. I think it's just a very versatile, very agile loan that you can use to kind of maximize and move money around. So, before we wrap it up, Auntie, is there anything else you want to say about the HELOC loan?
No, it's just a huge chance for us to invest in anything.
Yeah.
And so if you find a HELOC, you find me. And
Yeah.
if you want to purchase the house or like flipping, you find James.
Guys, there you have it. A HELOC loan is really good to take advantage and buy your second home. Do think about that. So then it's, a lot of times, what we've come across is a lot of clients that have a lot of equity in their house, but they don't have a lot of cash, right?
Yeah.
So what they can do is they can do a HELOC, get 20% down for a house, so then they don't have to pay that PMI. So there's a lot of good things that they can do with the HELOC. So anyways, hopefully you guys enjoy this video. This is James, the Pham Real Estate Group. I will be here with Auntie with Polaris Home Loans. So her contact information is down below. So if you need a HELOC, just reach out to her. Anyways, guys, peace and love.